Hello and welcome to this episode of Live with Lizzie Lee. Edge is a comprehensive database of Chinese companies for investors and due diligence researchers. I'm your host, Lizzie, an MIT-trained economist turned journalist here at Wall Street TV, who covers China and its relation to the world. Joining me today is Ms. Alicia Garcia Herrero, Chief Economist for Asia Pacific at the French investment bank Natixis. Thank you, Alicia, for being here with me.
It's a pleasure.
So I wanted to start with the most recent batch of China's economic data. If you look at the July's data on retail sales, industrial production, fixed asset investment, the data sort of missed economists' expectations across the board. So what did analysts get wrong about China's economic recovery?
Two things. The first thing is COVID, in the sense that we thought pent-up demand would be there as the lockdowns were easing, and the reality is that mobility, especially intra-city mobility, not only intra-city mobility, has worsened across major cities in China. So restrictions remain, not of course as much as in April and May, but more than in June. So there is a worsening in mobility. And that is harming retail sales. For fixed asset investment, we got one more thing wrong, which is that the real estate demise, which was basically last summer, would not come back in full force. But it is coming through mortgage boycotts, which could be more dangerous even than defaults of developers, because they are more widespread and more important for banks' balance sheets.
Right. And what's especially concerning is the job data we've seen so far. We saw, in fact, Tencent, a tech giant of China, has laid off more than 5,000 employees, which is roughly 5% of its total workforce. I wonder if investors should be concerned about China's tech giant's future growth trajectory.
Yes, employment is clearly a problem. We may not see that as obviously in general employment data for a number of reasons. We don't have migrant workers there, but we can sense the extent of the lack of especially new jobs for new people in the youth unemployment, which is nearly hitting 20%. It's very, very high for China. So this youth unemployment indeed was the one going to Tencent or going to certainly ICT companies, new China sectors. And those are indeed the sectors that have been harmed the most because of the regulatory crackdown. So the revenues are harmed because they can't do what they used to do, number one. And second, because the sentiment of the consumer isn't there. It is very negative. So that's why they are not hiring, they're laying off. And this is why youth unemployment is so high in China nowadays.
Right, and I think you briefly alluded to the problem in the property market sector. It seems to be facing a final fallout. Actually, we saw this dramatic wave of public defiance as Chinese homeowners in more than 100 cities threatened or started protests refusing to repay loans on their unfinished projects. So what tools does Beijing still have at this point to defuse the situation? Do you think Beijing will allow property market giants like Evergrande to collapse?
Well, if that was the intention, it's taken a year. So I guess it isn't really the intention so far, because they could have already let it go. And the reason is simple. Evergrande has basically only defaulted fully on, or at least has not made payments, because it's just a bond default. It's offshore bondholders. But the bulk of the matter here is pre-sales. So 80% of developers' funding, including Evergrande, comes from pre-sales. These pre-sales, which is, as you said, households basically prepaying partially through a mortgage, but also their savings for a property that has not yet been built. That's the core of the matter. These pre-sales, which were crucial for any developer, not only Evergrande, are not happening anymore in China. And that's why you have even much more reputable and certainly with better financial standing developers, such as Country Garden, basically having to be supported by China Bond Insurance Corporation, because they can't issue, even the best developers. So it's not only about Evergrande anymore. I don't know what the Chinese government wants to do with Evergrande, but in a way, it's too late, because others have been harmed through contagion because of this link. Pre-sales are pre-sales for anybody, and the households in China do not want to put the money upfront anymore.
Right, and given China's economic woes we've seen so far, but also given its market potential, how should investors balance the risks and returns of the Chinese market at this point?
Well, it depends on who you are. I guess if you operate onshore and that's your universe of investment, given that China still keeps, to me, still draconian controls on outflows, then I think you need to go for what I call countercyclical sectors, basically energy, utilities, state-owned dominated sectors. But if you are a foreign investor and you want to jump now into Chinese assets, I think you really need to play very safe. You need to play sovereign. There's not much paper out there, but you need to play perhaps policy banks. I mean, very, very safe paper. I think the high yield market, which was the darling of many investors looking for yield, is really over because it was so dominated by the real estate sector. It's not over forever, but it's over for a while. So I guess that's where we are now.
If you enjoy our discussions here, I'm sure you would find value in our new powerful marketplace tool for investors, also called China Edge. It tracks, distills, and analyzes both Chinese language and English language materials about Chinese companies, business leaders, and government entities, and reviews the often hidden links between them. For our YouTube viewers, we are offering a limited time 50% discount. Just go to the link you see on the screen and use the code EDGE50. Also, sign up for the China Edge newsletter. It's a daily 2-minute rundown of China business news you don't want to miss. The link is right here on the screen. You can also click on the link in the video's description section to get your complimentary subscription today.